Good morning to you. Good morning, everyone. If you can hear me, if you can see my screen, please kindly type in a hi button. Type in a hi in the comment section below, please. Hi, Max. Good morning. Let's quickly run through this. If you can hear me and can see my screen, please put a hi in the comment section below. Hey, Carrie. Good morning to you. Great. Great. So, I think we are good. So I would like to start right now. So let's dive into the charts and let's see what we have, what structures is giving us in preparation for the New York session. So we are going to be taking the pairs in the order of how we took them yesterday. And then the first thing we'll be doing, we are going to be looking at the ones we analyzed yesterday and look at what market has given us and how we can move forward from that point. So the first pair we are going to be talking about, we're going to be speculating on today is the UK oil, based on the fact that this is a popular demand in the forum. And let's quickly run through UK oil and see what is happening here. So yesterday we had a key level at $112, and we saw this scenario where we had this bearish trend line, and we said there are two scenarios that can play out at this point. The first scenario we said was that we should be looking forward to a breakdown of the neckline, where we look for a retest of structure, probably this key level or this trend line, after which we look for structures that supports the trend continuation to the downside. And the second scenario I stated was that we should be waiting for a breakout of this key level of this trend line, where we look for a retest, after which we take advantage of that move at the site of a structure that supports a trend continuation to the upside. And lo and behold, we have something that it fell according to expectation, as we saw that breakout of structure and we saw multiple rejection of this area. We saw multiple rejection of this area, after which I said we should put on a trade at above around $113.50. So presently price is running in profit of about how many pips now? Like approximately 100 pips in profit at the moment. So with this being said, we're already in profit on this one, and we're already seeing structures breaking out of that supply zone that we identified on the daily time frame. So what we are going to be doing at this point is to move our stop loss to break even, at least move our stop loss to somewhere around here, that is 113.70 on this one, and let's see how price plays out going forward. So what is going to be happening here is this. So we see this move up. We saw a retest of this area, and then we are seeing this move going to the upside. So if we see a move, let's say, excuse me a moment, we want to see an extension of this one. If we see an extension of this move, that is price, allow me to use my Fibonacci extension tool to be more okay. So this is what we have here. If we see an extension into this 141.4% area, or 127.2% area, that is, if we see something like this, price does this, price comes into this area, then if we see a retracement back into this area, then we want to be taking advantage. If we see a reversal structure around that area, then we want to add one more position to this trade going forward. So, but at the moment we are in profit, and just move your stop loss to break even on this one, and let's see how price plays out going into the New York session. So now moving on to the US oil. On the US oil, we identified this demand zone at $109, $110, and we said we want to be looking out for, as you can see, we said we want to be looking out for a breakout, a retest of structure, where we'll be looking for structures that support a trend continuation to the upside. And we identified this area between $110 and $112 as a buy opportunity zone where we can take advantage of that trade. However, I identified this area to be a precise entry point, at least $110.67 to take advantage of that bullish momentum. Right now, price has already triggered, and we have our stop loss right below structure around this area, which is about 120 pips, 130 pips thereabouts. So this trade is already running, it's executed, and is good to go. So let's see what happens as we anticipate the New York session, as we continue to see higher highs. If you allow me, we continue to see higher highs and lower highs, higher high, lower high, higher high, lower high, and we already have another higher high, and with prices currently oscillating within this area. So we want to be looking forward to a move going to the upside. I don't know if anyone took advantage of this trade. Pretty nice lady was here yesterday asking about how to take advantage of the US oil. I do not know if she's around to confirm if she took that trade. Beza, hi, good morning to you. Mary Q, hi. King.Kong, hi, good morning. Mumps, good morning to you. Zverina, good morning. Okay. So let's move on. So Ucoil is playing accordingly. So far we are good on the market for this week. And then let's move on to USD Jpy. Sorry. Let's move on to USD Jpy. Look at what happened on USD Jpy. We hit take profit yesterday on USD Jpy with around 120 pips profit, and we had two entries. We had one at 127.583 and 127.509. Both hit take profit as we saw price move in our direction, gave us that signal we're looking for, a retest into structure, and bank into take profit target at 126.400. If you are taking that trade yesterday on the USD Jpy, well done and kudos to you. It was a very swift and very sharp move to the downside. So now that we have this scenario right now, what are our expectations on this one at this point in time? Well, our key level here at 127, is it 127.600, still holds. As we can see, price has been respecting that line for some time. Now that we have that key level, we also need to look back and look at our trend line that we used on the daily time frame. And if you can see on your chart, you can see the trend line where we connected the series of lower highs since the beginning of May, at least of this month. We saw our price has been playing out since the beginning of the month. We saw price rejected that key level, giving us a retest of that trend line one more time before it broke down that key level a little bit. And then we can see that price was finding it difficult to get back into that trend line, which gives us a clue into the strength of the sellers at this point in time. And then we had a mini temporary supply zone around $128 area, where we saw price reject that area and then break down that key level. We identified and do a quick retest of that key level, and we saw that move bang to the downside. So we took in about 120 pips thereabouts, 240, the two trades. So now we have a scenario where price continued to find a higher high after take profit target was hit. So we begin to see something like this, which looked to me more like a correction phase, where we might be looking at price touching this key level or probably this trend line, and then we look for structures to enter this trade one more time. So for me personally, what I will be advising at this point is that we should be waiting for structures in the form of a reversal pattern at this point. As we can see, if we look at that impulse leg, give me a moment, we have this impulse leg right here, and we see price doing a retracement. Then we want to be looking at a retracement into our golden zone area, where we want to take advantage of the next bearish momentum that is building up right now. So how do we identify that selling opportunity zone? What we want to be looking forward to is to run our retracement tool through the length of that impulse leg. Then we identify between 50 and 78.6% retracement of that impulse leg as our selling opportunity zone from this point in the market. So if you allow me running my Fibonacci retracement tool, then we identify the range between 50 and 78.6% of the last impulse leg. We have something like this. So if you allow me, for clarity's sake, let's label this area so that we will be able to identify it and use it for future reference. So we have a selling opportunity right within this area, and let's place it right inside. So we delete our Fibonacci retracement tool right now. And then if you look at what is happening right now, we have a selling opportunity zone right between 127.2 and 127.750. And if you look closely into what that area is, it shares a confluence with that bearish trend line. So what we want to be looking out forward to is price coming into that area where we look for structures that support a trend continuation, probably a reversal pattern in whatever form you may be looking out for. It might be an inverse head and shoulder, 1, 2, 3 reversal pattern, rising wedge, double top structure, whatever structure you can think of that could form around this area, giving us a confirmation in the form of a breakout of structure, and then look for confirmation at a retest to join the rally to the downside. So if we look closely, we saw that we've had two rejection of that area right now. At least the early hours of today, we saw the first rejection of about 50% retracement. Price came back down. We saw 50% retracement rejected one more time again. So we don't know if price is going to be going downward from this area, or we are still going to touch the key level or the trend line, after which we might be seeing the move to the downside. So in that regard, since we cannot tell, that is, there's another way we can look at this. Now, if we look closely into what is happening in that retracement phase so far, we can identify a trend line that is a bullish trend line, which for me right now is a temporary one, which will be broken to give us a signal that price is going to move to the downside. So we have a trend line right here, which is we will call it a temporary bullish trend line, and let's give it a green. Temporary bullish trend line, let's label it. And the reason why it's temporary is because it's still within an area where selling momentum is still very, very high. So for this to become a main bullish trend line, we really need to see significant move out from that trend line, like sharp rejection, significant engulfing candles right from that trend line to make it a what's it called, a major one. So let me use the 15 minutes time frame too, because most of the time we don't really have an outright and precise trend line when we use higher time frame for temporary trend lines. So let's look at it closely and let's do that. Okay, we have it like this. So I think this is good for us at this point. Let me place this right at the bottom. Okay, so we have a temporary bullish trend line right here, and then like I was saying, I said we were waiting for price to go into that selling opportunity zone where we look for structure that supports a trend continuation to the downside. However, if we look at what has been happening since the beginning of this morning, we saw the first rejection of that 50% retracement. Price went into that trend line, then we saw the second rejection of that 50% retracement level, and then we begin to see something like this, and we never can tell if this might still push price further up. However, if price does not go back into the selling opportunity zone that we've identified on the 1 hour time frame, then a structure, a reversal pattern in the form of a breakdown of this trend line, a retest into that trend line, which should give us a confirmation, probably give us a structure that supports a trend continuation to the downside. So what this simply means is this: if we have this kind of scenario where we're looking for a breakdown of that trend line, then we should be having a key level around that area to play around with, especially when we are going into the New York session. So if we look left, we see that price rejected this area. One time was a support level, and this area too was a support level. Then we have a resistant level around here, resistant, 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 resistant multiple times. That area where the support and resistance match at one point in time in the past, and that area also has a breakdown or breakout at one point in time in the past, is more or less a very, very good key level that we can use to guide our actions going forward. So if you allow me, let's find out, let's highlight that key level at this point to be our new temporary key level, and this key level is important only for the breakdown of that trend line. So if you allow me, let's label this, let's give this purple, so we have something like this. So what I'm trying to say here is this: we want to see a breakdown of this trend line, we want to see a retest into trend line or the key level, after which we look for structures that support a trend continuation to the downside. So this is my expectation on the USD Jpy going into the New York session. So let me do a quick recap. The first thing first is this: we are expecting price to go into our supply zone, into the selling opportunity zone, where we look for price to give us structures that support a trend continuation to the downside. And if that does not happen, if price decides not to go that far, then we want to be looking for a breakdown of trend line, a retest of trend line, then look for structures that support a trend continuation to the downside. So now, what will our take profit target be after taking this 120 pips move? Well, we want to project that impulse leg into the future, and we want to project this into the future and look like, sorry, that is want it to look like this. So if you would allow me, bring out our Fibonacci extension tool and run it through that impulse leg so that we can have an area to call a take profit target going into the New York session. So we should be aiming around 125.9 and 125.6 area as our take profit target going forward. So we have a take profit target here. Let me just shorten it. TP target around here. So that's our TP target going into the New York session. And how many pips that is going to be depends on where we are going to enter this trade. If we are going to be entering right below the trend line, then definitely we will be having around, let's say, 120 pips again the second time. We already had 120 yesterday. We already have another 120 pips again this time. However, if price moves further up into the selling opportunity zone, then we will be having opportunity to take more pips from this market. So if we have that kind of scenario, then that is, we will be having around 160, 170 pips thereabout to catch. That is, if we have price come back into that selling opportunity zone, then we look for structures, breakdown of structure, we sell. Then one more thing I want to add here is this: if price gets back into that selling opportunity zone and we see a further breakdown again of this temporary bullish trend line, a retest of it should give us an opportunity to add one more position to this trade. I think I'm very, very clear on this one. So this is an expectation we'll be having on the USD Jpy going forward. So is there any question or clarification or addition to what I just said? Okay, in the absence of none, let's move forward. So moving on, the other pair we talked about was also CHF Jpy. We talked about CHF Jpy, and let's go back to our 1 hour time frame. On CHF Jpy, like I told you, we each take profit targets on Monday. We may take profit target on Monday, and since we eat profit target, price has begun to find lower lows and lower highs, giving us a situation that looks more like a retracement of that impulse move that happened on Monday, where we were significantly profitable. So now that we have that scenario, during the course of yesterday, we identified this bearish trend line, which I said could probably guide price into this buy opportunity zone we identified yesterday. And I said for those who like to take counter trend opportunities, could actually use that trend line as a guide going into the New York session of yesterday. So now today, price is here to come back into our buy opportunity zone as we keep on, we remain patient and watchful of what is happening in the market. So if you allow me, I want to redraw this trend line. As we can see, price has broken out of that trend line, giving us a scenario that looks more like the trend line is no longer being respected. But we really need to check if truly that trend line is no longer respected. So if you allow me, we bring out our line chart at this point and we redraw that trend line. We have the first one here, the first high there. Then we have the second one here, which has been guiding price action since yesterday. So if we have something like this, then let's go back to our candle chart. So we have something like this that we can play around with. Then this is what we have at this point. Remember, we're still expecting a bullish momentum on this one, so we're not going to be taking that bearish move. So, and why are we expecting a bullish momentum? Price has been very bullish for a while now. Since mid-May, we've been seeing price continue to find higher highs and higher lows. If you can see what structure, allow me to give you a visual representation of what I'm talking about. We have higher highs, higher low, higher high, higher low, and we have another high, and then we are caught within a consolidation phase that probably is giving us an indecision, giving us an idea that there is an indecision in the market if participants will want to go further up, or probably we want to trend lower. So if you allowed me, let's find out our bullish trend line on this 1 hour time frame that we can use to guide our actions going into the New York session. So if we have something like this, I think we have a major one here, and then we have a temporary one around here, because this one also guided price action. So allow me to give this a dashed line to indicate that it's a temporary trend line. So we want to be seeing price respecting this trend line, and you can see that this trend line also shares a confluence with the demand zone we identified yesterday. So we want to be looking forward to price coming back into that buy opportunity zone, where we look for structures that supports a trend continuation to the upside, and then we still aim at our 133, which is around 150 pips take profit target. That is, if price comes back into our buy opportunity zone here. So that's one perspective to this. Another perspective to this is a situation here I've noticed. It caught my attention. As we can see, as soon as price is respecting that trend line, we saw price respecting the trend line, we saw it respecting, then we saw a rejection of 131.750 area. Price came back up a lower high, sorry, a higher low. Then we saw another higher low here. We saw a breakout of that trend line. Could this be a signal or a false one? Is it a signal that is it a true breakout or a false breakout? We never can tell yet until we look for further confirmation, as price has come back into structure at this point. So if you allow me, for clarity's sake, it is appropriate that at this point we recognize this level as somewhat level that has been holding price for some time, and this could be our demand zone going forward. New demand zone. We are not sure if that is anyway, so I'll have to put a question mark in there, because we are not sure if this demand zone is going to hold price going forward. So now we already have a breakout of that trend line at this point. We had a bullish engulfing candle, then we have a retest of structure at this point. Then we might be looking for structures that support a trend continuation to the upside. So if I were you at this point, that is, if price does not break down this demand zone into this area where we are looking for that bullish move, then definitely we want to be taking advantage. We don't want to miss that bullish move when it finally happens. So if we look left, we can see that we have a structure right around here that has been a demand structure before. You can see this area has been a resistant level. Oh, hold on, let's go back to our candle. See, it has been a resistant level here, a demand, resistant level, resistant before we saw that breakout. So at this point, at that level, which is around 132 Japanese yen, is a breakout of that level is going to be a very good area for us to take advantage of that bullish move when it finally happens. So we want to be looking at, hold on a second please, we want to be looking at our entry point around this area if price does not go further down. So we want to be looking at entry points around this area with our stop loss right below structure. That's the demand level, that's around 35 to 40 pips. Then we want to be looking at for our take profit target to be an extension of that bullish that impulse leg that we cited earlier. Then we have 127.2 and 1414 area as our take profit target. So if you allow me, let's have it 133. You can keep that 133, that's like 98 pips, or you can go as far as 141, that's 133.3 area, which gives us around 125 pips in profit if price moves from that level. So if we are taking that entry, we're taking that move from the upside, then we want to look for breakout of that structure further up, then a retest into that trend line. Then if we see a retest into that temporary bearish bullish trend line, then we want to be looking for another opportunity to add to our existing position that push price into 133.200. So this is that on the USD Jpy. Sorry, this is CHF Jpy. So this is my expectation on the CHF Jpy. So that's that. So moving on, we move on to Euro CHF. Euro CHF, despite the fact that we were profitable during the course of yesterday, price crashed back down into our entry point, hereby negating the structure we've been building on since the beginning of the week. So right now on the Euro CHF, we already had a breakdown of that bullish trend line. We were not able to hit take profit target, and the way structures is looking at right now, it's already evolving into a downtrend scenario where our key level has been broken to the downside. Our key level that I told you is going to be our guide going into this week has already been broken to the downside. So one thing we want to be looking out for at this point is this. Now that price has broken down that key level, then we need to identify a trend line to guide our actions going forward. So with the trend line right around this area, I think we have one here. We have one here. We have a trend line here. Okay. So we want to be looking forward to a retest of that trend line, which also shares a confluence with the key level at 1.0300, and we look for structures that support a trend continuation to the downside. So you can see how market has transposed from the bullish momentum we were expecting into what looks more like a bearish momentum at this point. So now that we have this kind of scenario, that's why we really need to be very, very patient, and let's see how price plays out before we jump into the market. We really need to look for better confirmations, solid confirmations that support the bias that we are looking out for. So now that we have a breakdown of, we already saw this false breakdown, which probably should have given us a sign that sellers are actually strong in this market. Then we saw the breakdown of that trend line the second time. Then we finally saw the breakdown and retest of that trend line here, which also we also saw the breakdown of that key level, which has been guiding our action since the beginning of the week. So now that we have that breakdown, we want to be looking for a retest for confirmation to join the trend continuation to the downside. So if that is the case, and then definitely we want to be having our take profit target. If we are going to be entering right below that key level, then we want to be having our take profit target at let's go left and see what has been happening. So we have a demand zone around here. We have a demand zone around here we can work with, and sorry, it was here. If we look left, yes, we have a demand zone around here. So we want to be expecting price to come into that demand zone at least. So we will be having a minimum of 100 pips, a 100 pips take profit target. That's a potential take profit target. Then we should be having our stop loss right above structure, which is around here, and that's like around 18 to 20 pips stop loss thereabout. I think 25 pips depending on your account size. So we don't want to see a breakout. We don't want to see a breakout retest of this trend line. We only want to be seeing a retest, a rejection of that trend line with structures that support a trend continuation to the downside. So this is the scenario we're looking at for the Euro CHF. Like I said, we missed the bullish move did not happen as expected, and the breakdown of that trend line and key level is giving us another perspective to the Euro CHF. So moving on to the GBP New Zealand we talked about yesterday. On the GBP New Zealand, we really are very, very good in profit on the GBP New Zealand, as we are already in how many pips in profit now? 160 pips in profit on the GBP New Zealand. So I don't know if anyone took advantage of that trade, of the JP New Zealand trade. If you took advantage of that trade, well done and kudos to you. However, for those who are joining us afresh and new today, we still have a chance of taking advantage of this move. If we look left, we really have a structure that we can play around with going into the New York session. So if we look left, we have this structure around here. We had the support level around here, which was broken during the course of yesterday's trading session. And that level at this point shall be our yardstick going forward. So right now, what we want to be looking forward to is we should have a retest of that level. And it seems we already have that happening at the moment. However, there is still a possibility that price might come above that key level and go into that bearish trend line where we're probably going to be seeing a reversal structure that will hit the trend line the second time. Then a breakout of structure whereby that key level now becomes a neckline of that reversal pattern, a retest into structure, then we can be looking to join the decline to the downside. So what this simply means is that we want to be entering this trade after confirmation right below that key level here. Then we aim at a take profit target right within that demand zone, or we keep it right at where we were before. As you can see, if we look left, we're still at 1.917 as our take profit target. We could still leave it back there, and that's like around 200 pips and profit. Then we have our stop loss right above structure around here with around 60 pips stop loss. So we want to be looking forward to going into the New York session. There are two things we want to be using as our guide. The first and first is this bearish trend line, which I would like to extend a little bit so that we can, and I would like to give this, thicken it a little bit so that we can see it. Yes, we have that trend line to guide our actions, coupled with this key level right here at 1.994 area. I think 1.94 is okay. Yes, 1.94 area to guide our actions going into the New York session. And like I said, we are waiting for price to come and reject. We already have something that looks like a rejection, but for me it's not yet good enough. We want to see price come into this trend line or probably come above. Then we look for structures. We want to look for structures around here that will support a trend continuation to the downside. So that is that on the GBP New Zealand. That's that on the GBP New Zealand. And then let's move on to let's move on to Xau USD. Xau USD did not move as expected as we hit stop loss yesterday. And the reason why we hit stop loss was that we saw price find higher highs at this point. We saw price go up a little bit, then come down. So it took us out here. And remember what I said yesterday on this gold pair. We said we are on long-term bullish momentum on this one, and I'm expecting price to either come down into this bullish trend line, after which we look for structures that support a bullish momentum, or probably we wait for price to come back down into this buy opportunity zone here, or probably retest this key level, this trend line that was broken last week. Then we look for a trend continuation to the upside. But the way things are looking right now on the 1 hour time frame, it appears price is already coming down as expected. Then let us look at how far this was going to go. Will it come back to this level, or probably come back into this key level where we're going to be looking forward to that bullish move to the upside? So I want us to be very, very patient on this one. For me, I would have said that it was a mistake taking that bearish move on the side, because it's a strong term bullish momentum, and we should be definitely be looking for ways to take advantage of that move to the upside. And there is another one around this area, this trend line that we are looking at here. So one thing I want to be looking forward to is this. We want to be looking forward to a possible confluence here, where we are waiting for price to come into to retest this, then we see structures that support a trend continuation to the upside. So let's be patient on this one and let's see how price action reacts. Remember, we have a take profit target within this area, and whatever happens, if we see significant reversal pattern around this area during the New York session, then we can actually take advantage of that move to the upside. Or we could have a breakdown of that trend line where we see price go further down into this area before we see that move to the upside. Anyhow it plays out, let's keep our fingers crossed, patient, and very, very conscious, as we need to catch it very early enough so that we can be very comfortable in the trade when we are in. Excuse me. So moving on, GPP JPY. We talked about GPP JPY yesterday, and like I said, we were taken out from GPP JPY 2 days ago, and we are still expecting that momentum that supports that bullish move on the GPP JPY. However, it is worthy to note here that we had a breakdown of that trend line during the course of yesterday's trading session, and since then we've been seeing a consolidation phase around that trend line, which gives me a clue that participants are actually waiting for an information on how to that will determine how price is going to move. Will it move further up? Are we going to be seeing a break above that key level, the retest of structure, which is same price going up, or probably we're going to be seeing a trend continuation to the downside? So on this one, I will suggest that we remain patient, very, very patient on this one, because we really need to look for structures that will guide our actions. And if we look left, we can see that we have a bearish trend line that we can work with from this point. We have a bearish trend line around this area. So the possibility that price could come into that trend line before it moves down is very, very visible too as well. However, if we have a breakout of that trend line, then we will be switching our bias back to the bullish momentum we were expecting on this pair. So we'll be looking for a breakout of that structure. We'll look for a retest into that key level. Then we can now join the rally at the same entry point identified at 160 area for the bullish momentum, with a take profit target at 163.5. Personally, for me, I'm not going to do any sell on this one. I'm not going to do any sell on this one for now, because we are sitting right on a demand zone that has been a supply level in the past. I'm not going to sell anything on the GBP JPY unless I see a breakdown of that demand zone. Then I see a retest into structure before I can do any sell. So patience is hereby required on the GBP JPY. So let's keep our fingers crossed, and whatever happens, if it happens accordingly with what we said, then we can actually join the move. Then on AUD card, AUD card yesterday was its break even, as price though moved in our favor, but it came back to entry points and moved the other way around, hereby closing at break even. However, like I said, I'm expecting a bearish momentum on the AUD card. And why is that? If we go back to the daily time frame here, let's look at the daily time frame together and zoom into what has been happening since the beginning of April. We can see that when we connect the series of higher, lower highs, we can identify a bearish trend line. And right now, price is right within that area where it's rejecting that trend line. And because of this, I'm expecting that bearish move to the downside from this area. Then yesterday we talked about how we could take advantage of it, but it didn't move as expected, as we saw price found a higher high at this point. Now that we had a higher high, one thing I observed here is that we saw this structure which looks more like a double top structure at this point. You see, after that bullish move, we saw price reject 0.91270 area, then respected that trend line again and came back into that zone again, rejecting it one more time in the early hours of today, and price finally came back down to break down that bullish trend line, also break down that neckline of that reversal pattern. So this is more like a signal for me that I think the bearish move that we were expecting yesterday is finally unfolding before our eyes. So now, how do we take advantage of that bearish move? Now that we have a breakdown of structure, which is also the neckline of our reversal pattern, it is appropriate that we identify this level and use it as our guide going forward. So what this simply means is that our key level right here will be readjusted to fit into that neckline that we are going to be identified here. And if you look left, you can see that the structure is being respected in the past. As you can see, it was a support level here, a resistant level here, a resistant level here, now a support level at this point. So going back to our candle chart, this is what we have right now. So we have our neckline here, and then price has already broken that neckline. That is a significant what's it called, a significant signal. We want price to come down a little bit, or probably we want to see price do a retest of structure. It could be a retest of this bullish trend line or a retest of this neckline at this point, where we look for structures that support a trend continuation to the downside. So what we want to be doing at this point is to be having our entry point right around here, where we will be aiming at the same take profit target that we did yesterday, and we have something like this with our stop loss right above structure at around 26-30 pips. We have our stop loss around this area. Then we'll have our take profit target at 0.8990, which is approximately 90 pips on this one. So what we want to be looking out for is this. For me personally, if I were you could take advantage of that move. Since we're already expecting that bearish move, then we could take advantage of that move, take advantage of this. Then if we see a retest of the structure, then we can add one more position to this at signs that support a trend continuation to the downside. And if we see that breakdown again, and we see another retest of this trend line, we should add one more position to it. So what I'm simply saying is this trend line here, allow me to give it a red so that it will be clear and make it thicker. So this trend line here shall be our guide going into the New York session. This trend line and this key level shall be our guide. So if you enter this trade right now at this point, then we look forward to price coming down a little bit, then doing a retest of structure. If it does a retest of that structure, then we can add one more position to this trade as a breakout of structure again. That is when we see the signal of the reversal pattern forming. Then if we see a breakdown of that trend line, that red trend line, then we see a retest again, please add one more position to it again as we guide actions going into our TP target at 0.8990. So that's that on the AUD card. And then let's move on to AUD USD, the Aussie dollar. The Aussie dollar, we've been expecting price to move into move below our key level at 0.7650 since yesterday, which has not happened. And though we have this reversal pattern identified here also on the daily time frame on the AUD USD, as you can see, we have the reversal pattern. We have a double top structure at this point. If you allow me, let me give you a visual representation of what I'm talking about. We have the first rejection of this area, we came back to neckline. We have a rejection of this area one more time. Then we want to be looking forward to a breakdown of that key level, and you can see that key level also shares a confluence with the bullish trend line and the bearish trend line here. So we want to be looking for a breakdown of that key level, trend line, a retest of structure of both trend lines or key level, whichever one that holds. Then we look for patterns that support a trend continuation to the downside. So what this simply means that we want to be having our entry point right at 0.70607, which we've identified yesterday, and with a stop loss right above structure at about 40 pips. Let me see, is 40 pips not too far? Let's look at it closely. Okay, it's okay, 40 pips okay. Then we have our take profit target at 0.69400, which is about 120 pips profit target. So going into the New York session, we want to be using this line chart here. this bearish trend line, let me make it thicker, as our guide. We want to be using the key level here and the bearish trend line as our guide going into the New York session. So once we want to be looking forward, we want to look breakdown, retest. If we see a retest of it, we join, we had more position, and we enjoy the decline to the downside. So that's that on the AUD USD. And the last one but not the least is the New Zealand USD. The New Zealand USD, I guess. Okay, on the New Zealand USD, we're expecting the same setup, the same scenario. However, I'll just say that we should hold on the New Zealand USD as prices far away from the structure at this point. I don't know if I can project anything into the future right now at this area. I don't think so. I don't think so. I don't think so. Well, we could probably be looking forward to a breakdown of that neckline here. Then we look for structures around there. So okay, if we are looking for a bearish momentum on this one, then we want to be looking forward to a breakdown of that trend line, here, that green line, a retest, then we join the decline to the downside. However, considering this bullish momentum, this is a very strong engulfing candle that gripped the market. We might be having a retest of that key level. Then if we look forward to reversal pattern around this area, and this could take probably around 2 to 4 hours before this forms, and then we look for breakout of structure, then we can actually join the rally if that happens. So this is where I will be stopping. I'll making it a day. But before I do, let us quickly do a quick recap of what we talked about so far. So on the UK oil, we are still holding our bullish buyers on the UK oil, and I told you to move your stop loss to 113.70 area, where we monitor price action as we move into the New York session on this one. Then moving on to the US oil, the bullish bias is still maintained. Like I said, we got our trade triggered within the buy opportunity zone here, and we are running around how many pips in profit? Like 64, 65 pips in profit at this point. So I want us to move our stop loss to somewhere around below that key level, because we don't want price to take us we don't want to lose too much if price does not go as expected. But remember that this demand zone still holds unless we have a breakdown of that demand zone. Then this bearish trend line will be our guide going forward. So in that case, we still hold on to our bullish bias on the US oil. So moving on to USD Jpy. USD Jpy, I explained to you that we should hold and see how price reacts, that we want to see price come into our selling opportunity zone around here, where we look for structures that support a trend continuation to the downside. And if that happens, we want to look for, if we see the breakdown of this temporary bullish trend line, a retest into that trend line or key level, or this trend line should make us add one more position to this trade at this point. However, I also stated that price might not go as far as that selling opportunity zone. The possibility that price breaks down that bullish trend line is also very visible. And if price breaks down that bullish trend line, then we want to be looking for a retest of that trend line to take advantage of that bearish momentum that we were expecting. So we still have around 120 pips like the one we took yesterday. Yesterday too, we made 120 pips on this one too yesterday. So this is what I'm expecting on USD JPY. So CHF JPY, what's happening on CHF JPY? We were taking out on CHF JPY. No, sorry. We took profit on CHF JPY. That was 2 days ago, and price appears to be doing what looks more like a retracement phase into the buy opportunity zone we have identified. Sorry, buy opportunity zone that we have identified here, where we are looking for structures that will support a trend continuation to the upside. However, I stated here that the possibility that price, because if we look at what has been happening since the beginning of that retracement phase, this area has been holding price supported for a while since yesterday, and we can see we saw the breakout of that trend line, which I'm not sure that is a signal. However, I stated that considering the multiple rejection of 131.800 area, we should be identifying a demand zone around here that could guide our action going into the New York session. So what I said as confirmation is this. I said if price comes back up and break above that key level, we want to buy around 132.050 area, where we look for retest to add more position to that trade. So we have something like this, then we to the upside. However, if we have a breakdown of this demand zone, then a retest of that will probably wait for price to come into this buy opportunity zone, where we look for structures that support a trend continuation to the upside. So our buyers on the CHF JPY still remain bullish. Now moving on to Euro CHF. Euro CHF, I said we were taken out of Euro CHF at break even yesterday as we saw price breakdown of the key level here, and it was an emphatic breakdown, and because of that breakdown of that key level, the bullish setup has been negated at this point. So we have a bearish trend line that will be guiding our actions going into the New York session. So what this simply means is this: we want to be waiting for price to come back into the key level, or probably the trend line, where we look for structures that support the trend continuation to the downside, where we can actually take advantage of the bearish move when it finally happens. Then we're aiming at a take profit target at 1.01900, which is around 100 pips. And then I also made mention that we should allow this trend line to be our guide, to be our shepherd going forward, as any rejection of that trend line welcomes an opportunity to add more position to this trade. However, considering the bullish momentum that we were expecting, if price does not do that and we see a break above that trend line, then we saw a retest, then we might be looking for structures that will guide our action going into the New York session, that is going bullish, and our entry point will still remain where it is at 1.03077, with a take profit target remaining between that 1.04300 of about 120 pips potential TP. So this is our perspective on the Euro CHF. So that is that on the Euro CHF. Then we talked about the GBP New Zealand, where we are already in profit on GBP New Zealand. I said I am profitable at this moment. I took this trade, and we are like how many pips in profit now? We are like 150 pips in profit at the moment on the GBP New Zealand. And one thing I said is this: if you are not in that trade that we took yesterday, we already have another structure we can play around with going into the New York session. So we have a breakdown of that that structure during the course of during the early hours of today. We saw the breakdown of that structure, and we probably want to be looking forward to a retest of structure. We look for reversal pattern within this area, or probably we wait for price. If we don't see that, we see price come back into that trend line, then we look for structures that support a trend continuation to the downside in the form of a breakdown of that key level, a retest, then we join the decline to the downside. So what this simply means is that this trend line, this bullish dotted trend line, this bearish dotted trend line shall be our guide going into the New York session. The trend line and this key level shall be our guide going into the New York session. So any rejection of that trend line will give you an opportunity to add more position to this trade. So our take profit target still remain at 1.91700, which is about 200 pips. So let's see how price plays out as we head into the New York session. Then we move on to Xau USD, which I said we should just hold on Xau USD. We took a sell opportunity yesterday, but was taken out as we saw that bullish move to the upside. And remember, overall, I said on the gold, I'm expecting a long-term bullish momentum on the gold, and we want to wait for price to come back into this trend line, where we look for structures that support a trend continuation to the upside, or we wait. If we see a breakdown, then we wait for price to come into this key level, where we look for structures that supports the trend continuation to the upside, or there is a possibility that price could come back down, crash further down into the trend line that was broken. You see, we have the broken trend line that was broken here, crash down into that trend line, where we see we look forward to another bullish momentum. So on the gold, it's very advisable that we remain very patient on this one, as any impulsive move, any compulsive move at this point could probably put our account in jeopardy. So let's hold on for that bullish momentum to unfold and to mature before we join the rally to the upside. Then we talked about GBP JPY, which we said our bullish momentum has been negated on this one, and it can only hold if we see a breakout of that trend, of that key level here, a retest. Then we can actually go back to our few previous entry points on this one. So on the GBP JPY, I said we should just hold on and see how price action react. As like I said, I'm not taking any selling opportunity on this one, as we are sitting on a very strong demand zone at this point. So any opportunity we want to be thinking of on the GBP JPY is to buy, and we can only buy if we see structures that support that momentum. So now on the AUD card, we identified a double top structure right here, and we are looking forward to a breakdown of that structure, which we have already seen. We're looking for a retest to join the decline to the downside. So if you already entered this trade at this point, we want to have our stop loss right around this area, 26 pips. And if you are even stopped out, don't take it too hard on yourself, because if we might be having a retest of this area where we look for structures that support a trend continuation to the downside. Then we can be having another if we have a retest of this trend line, then we could add one more position to this trade when we see a retest of this trend line to the downside. So what this simply means here on the AUD card is that we will be having this key level at 0.909, and this trend line, this red trend line, as our guide going into the New York session. So on this note, I would like to call it a day. We talked about almost 10 pairs today, and let's see how this goes going into the New York session. So I want to wish you a wonderful and best of luck today as we get prepared for the New York session. Isaac Cruz, powerful indeed.